What's going on, guys? My name is Richard and welcome back to the channel. Today we're going to be talking about Apps or Digital Turbine Inc., which is my stock of the week. And so far in 2020, it's gone all the way from below $4 a share in March, now all the way up to $25 a share just a few months later. And at this time, it's definitely short-term extended from those key moving averages, the 21 EMA, the 10-day, the 50-day, the 10-week. And at this point, I think it's very critical that you wait for a good, low-risk, high-reward entry setup. And in this video, we'll go through what this company actually does by visiting its website and a few different articles. Then we'll come back to Marketsmith, which is sponsoring this video, and go through those key fundamental numbers like earnings growth, sales growth, fund ownership. And finally, to round out the video, we'll go through the technical analysis of the price action, and I'll discuss the exact entry setup that I'm waiting to see before I trade the stock either as a swing trade or position trade. So this should be a great video, and if you do enjoy my analysis, please go ahead and leave a like down below. It really does help me out and my channel. And also, if you are new and looking forward to more videos just like this one, go ahead and subscribe as well. All right, so diving right into the video, let's first go over to their About page on their website and discuss what this company actually does. And right here, it says that Digital Turbine simplifies content discovery and delivers it directly to the device. And in summary, this company basically operates as a middleman in between the device manufacturers, the OEMs, and the people who create the content, the applications that go on those devices. And this is reinforced once again on this page right here. You've got their two main slices of their business, their relationship with operators and OEMs, so T-Mobile, Samsung, and then also the advertisers, the companies who create the applications. And scrolling up here, you can see all the different companies that basically work with Digital Turbine. And you've got Samsung, Verizon, AT&T, T-Mobile, Uber, Pandora. You've got even more over here. And basically all these companies either are in one of these two camps. So they're either an OEM paying for access to these applications, or they are a company that provides these applications paying to put them on those smart TVs or smartphones. And if you have recently activated either a smart device like a smart TV or even just a smartphone, it's pretty likely that you've used their platform to set up your phone on that first day. And then on the advertiser end, there's a couple different ways to get your apps onto user phones, such as during app installs or during advertising. So overall, that is a quick summary about what this company actually does. And I think that as we continue to live more and more of our lives, unfortunately, in front of these little screens on our phones, this type of business can be very, very profitable and experience a ton of growth. And overall, if you want a little bit more information about the company and really go in depth into their financials and balance sheets, I think this article, which will be linked below, is definitely worth a read. But personally, since I'm more of a swing position trader, I don't care too much about every single little detail, and I would prefer to just look at a brief summary that I can find in Marketsmith. And overall, looking at the earnings and sales, you can see excellent growth here. The last 3 quarters, earnings and sales have been accelerating. Last quarter, earnings were up 160%, sales up 93%, and after-tax margins up 21.2%. And looking at the annual EPS estimates, you can see there's a lot of growth expected. In 2021, it's supposed to grow 130%, and in 2022, up a further 26% on top of that. And overall, the EPS rating is a 77, the Group RS is an A+, the SMA rating is an A, accumulation distribution is an A+, and the overall composite rating is a very strong 99. And looking at the fund ownership, you can see an increasing trend over the past 2 years, but you do not have any high-quality funds investing into this company as of yet. And looking at the chart, you can see that the RS rating is a very strong 99. The RS line is right near all-time highs, and overall, it just had a big gap up on volume, up 30% after a stellar earnings report, and right now it's just drifting higher. And overall, going over to a weekly chart, you can see a few more quarters of that excellent growth in terms of both earnings and sales. And overall, you can see that the up-down volume ratio is a very strong 2.9, and that return on equity is a very good 31% as well. So that's a quick look at the fundamentals, and overall, the IBD ratings are very strong. And now let's talk about the technicals and what I'm looking for before I would enter this stock. So here we are on a monthly chart, and I think it's always important to get some context about a company because this is a turnaround story. You can see that the stock actually peaked in price all the way in 2008 in March. And since then, it got knocked down even below $1, but now this year it's making a huge comeback. And as I said, it's gone from below $4 in March of 2020 to now around $25. And given that context, you can see that it isn't above its green line breakout. So that is one negative for me, but it is on a massive tear and definitely is in a very strong uptrend. So now that we've determined that the stock is in a very strong uptrend, we can go over to a daily chart and look for a nice low risk, high reward setup. And how I determine a low risk, high reward setup is that I know very quickly within 5% whether the stock setup has failed or succeeded. And at this point, after this big earnings gap up, it's been drifting higher and there's no real edge here because you can see it's about 10% from the 10 EMA, even further from the 21 EMA, almost 26%, and it's very, very extended from the 50 SMA as well, about 45%. So I think at this time it would be completely normal if it falls to the 10 EMA, even the 21 EMA, as long as that moving average line is above the low of this breakout day, which is about 1932. So overall, I don't think you have an edge up here, especially because it is so extended from those key moving averages, and it would be completely normal if it pulled back even all the way down to 19. And at this time, I would wait for a short-term stochastic cross, a green dot entry, a retake of the 10 EMA if it undercuts and then moves above it, or even the 21 EMA if it lets it catch up. And I think any consolidation like that would be very bullish and would set up another run upwards. And once it does start to consolidate, you can draw a downward trend line from the tops of the highs. And so when it breaks this line, as with right here, if it's a nice long-term consolidation, it can really explode upwards once again. And one thing I like about this breakout is how powerful it was. And you can see that in the volume coming in and also the Bollinger Band expansion right here. And Bollinger Bands are a measure of volatility. You can see that below this downward trend line right here, as it was consolidating, pulling back to the 21 EMA, they really constricted and then they exploded upwards right before the earnings report. And now this move upward once again. So I want to see the moving averages catch up, the Bollinger Bands restrict again, and then I want to see a breakout from another downward trend line. I think that would be an excellent low risk, high reward breakout. So that's my analysis of apps. I hope you guys enjoyed this video. Please go ahead and leave a like down below if you did and subscribe if you're new to the channel. And I'll see you guys in future videos.